points higher for the Nifty. The sensex is up 180 points. The Nifty, though, has given up its early morning gains, has moved into the red terrain.
115-point downtick on the Nifty, and that's almost a 300-point downtick that we are seeing from the top today.
It's been tricky, and today the mid-cap index is taking the biggest brunt, down over 330 points. The good part is at least some levels, 18,200, the recent low, is something that's holding at least for now.
It was a weak trading session. The Nifty ends close to around that 18,200 odd mark, and from the frontline index itself, well, the day belonged to the pharma name. Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track the 6 hours of the day's trading action in just 5 top headlines. I'm Nigel D'Souza. Let's get straight to the top headlines of the day. A volatile day sees Indian indices tracking weak global cues to close at over 1-month lows. The sensex and the Nifty fall close around 1% to around 2% odd. The markets underperform benchmarks. Bank stocks lead the fall while mid-caps get battered. Diagnostic stocks surge after health ministers meeting to review the COVID situation amidst the rising cases globally. However, players don't see a significant uptick in COVID revenues. Dr. Lal's Path Lab, Thyrocare, Metropolis, all of them gain big time in trade. Market regulator SEBI decides to phase out the share buyback from the open market in a gradual manner. Until then, a separate window will be created on the stock exchanges to conduct buybacks. SEBI chairperson says it will create a level playing field for all investors. Shyam Metallics gains 3% after it acquires the stainless steel maker Mittal Corp and draws up big capex plans. Meanwhile, Uno Minda closes flat after gaining a trade on the back of a technology alliance with Ascent Tech of Korea to develop wheel speed sensors in India. RBI Governor Shaktikanta Das makes yet another pitch against private cryptocurrencies, says that they will cause the next financial crisis, adds that the credit deposit gap seems divergent due to the low base. Well, here's what we have lined up for the show. In Market Opinion, we have Sanjeev Prasad, Managing Director of Kotak Institutional Equities, and in Big Corporate Voices, we have Ashish Gaikad, Managing Director of Honeywell Automation, to talk about, spots for the exports in the global scenario. Well, it was a volatile day of trade, which saw the indices close at 1-month lows, courtesy weak global cues. The sensex and the Nifty, both of them down close to 100%, with the market breadth firmly in favor of the declines. The broader markets underperformed the benchmarks, with the Nifty Bank and the mid-cap index falling 1.5%, while pharma and diagnostic stocks, well, they did pretty well. Reopening stocks, though, they slipped on the back of COVID concerns. Mangla Malu joins us to run us through a quick wrap of what went on in market action.
Well, it was a weak day of trade, but importantly, it was a weak, volatile day of trade. There was rise of fear, and it was rise of COVID fear as well. India VIX was the standout index that told you the story of the day. The Nifty meandered in a 300-point range, with the highs being just below that 18,500 mark and the lows being just above that 18,150 mark as well, which again is in the broad range of both the 50 and the 20-day moving averages of the Nifty. Talking about moving averages, the Nifty Bank, which had held on to the 20-day moving average, had now broken it in today's trading session and closed below that as well. The broader markets were telling you that there was weakness, weak internals, 5 stocks declined for each stock that advanced, and the mid-cap index underperformed both the Nifty as well as the Nifty Bank. The only index that stood its ground today was the Nifty Pharmaceutical Index, and a bunch of these diagnostic stocks that gained on fears of rising COVID cases in China. So just to name a few, we had Glenmark Pharma, Granules, Divi's and Cipla from the Pharma pack do extremely well. Diagnostic gainers for Metropolis, Dr. Lal and Thyrocare. But on the weaker side, we had all those unlocked stocks go back into, losing terrain. But these again are just fears. And as a result of which, we saw a bit of decline in Indian Hotels, Delta Corp, PVR, as well as Trent. It was a weak day. It was a weak, volatile day.
All right, Manglam, thanks a lot for that. Well, let's get you some market opinions. Sanjeev Prasad of Kotak Institutional Equities said that the market is in a consolidation phase and that the current market valuations are risk. About the IT space, he said that the sector remains under pressure, likely due to a recession in Europe. Let's hear him out.
Market hasn't done much in 2022 also. So last 15 months, if you take, let's say from September end of 2021, it's been pretty much in that 18,000 plus minus range only, barring a bigger correction in May and June. People are obviously very worried about high inflation and high interest rates and so on and so forth. So market is as of now, in a consolidation phase. Valuations are rich. And the second thing which we have to figure out is, how long do the central banks, including the RBI, hold interest rates? So as of now, we're getting some comfort on the fact that inflation seems to have peaked in some countries, peaking in others. So hopefully, as far as the actual central banks are concerned, we are probably reaching terminal or peak rates as far as the current monetary cycle is concerned. Europe is going through a massive slowdown and probably will get into a recession also. If you look at the non-farm payroll addition in the US, that is still very, very strong at about 250,000 plus last couple of months. So clearly we're not gone to a stage where US is starting to feel the effects of the higher interest rates and so on and so forth, which means the central bank will have no option but to keep interest rates higher for a longer period of time to actually break down inflation expectation and particularly core inflation. So in that context, I would assume if you're looking at a slowdown in the US posed by the actual central banks, I suspect IT demand is not going to be strong, particularly the discretionary part of demand from customers.
Moving on to some more opinion, Arvind Sanger, the managing partner at Geosphere Capital Management, said that 2023 appears to be the start of a rocky note as inflation, slowdown and recession need to be taken care of for a new bull market. Let's take a look.
I don't think we get a new bull market until we get through this phase of inflation, slowdown, recession, resolved to a meaningful extent. I'm not saying that we have to come out to all clear, but I think it's a pretty good chance that we're at least going into a mild recession in the US. Europe is already in a recession. I think 23 is at least going to start out, in my opinion, to be a little rocky. But I'm hopeful that by the time we get to the second half, things will start to look a lot clearer. But in the meantime, it makes sense to be a little cautious.
Well, moving to the second headline now. Diagnostic stocks, well, they surged in trade today after the health ministers' meeting to review the COVID situation amidst rising cases globally. However, players don't see a significant uptick in COVID revenues. Ekta Patra is standing by to run us through with more details on that. Ekta?
Well, yes, a lot of these diagnostic companies are in focus on account of concerns now that COVID-19 cases are rising globally. I did speak to a couple of the lab companies, and as of now, they said that COVID-19 testing is still insignificant. There is no change in the curve. They do expect a possible increase in terms of the COVID-19 volumes only if in case there is hospitalizations or the severity of the cases rise as well. That one will assess over the next couple of weeks. Even if in case there is an increase in terms of the severity as well as hospitalizations and the volumes for diagnostic labs, the competition is so high that you're probably going to see, you're probably not going to see the volumes come in as significantly as we saw during the earlier COVID-19 waves. So that's the feedback that I'm picking up from diagnostic companies as of now. If you already saw their revenues with regards to COVID-19 testing in Q2, it has fallen anywhere between 80 to 90% on a year-on-year basis, or almost even 100% for some companies. Valuation-wise, these stocks have corrected significantly, but they're still trading at quite a premium on a one-year forward basis.
All right, Ekta, thanks a lot for that. Well, staying with this piece, the prices of active pharmaceutical ingredients, or API from China, have risen in the last 2 weeks by around 12 to around 25%. This according to media reports that say that the rise has been triggered by an uptick in the number of cases in China. Ekta, coming back to you once again with the likely impact for API companies.
Well, yes, there is an ET report which has indicated that the price of APIs from China have risen in the last 2 weeks anywhere between 12 to 25%. Now, one of the reasons is that China is reducing exports as domestic demand and consumption has risen due to COVID-19. Prices of APIs such as paracetamol, azithromycin have increased in the past fortnight. CNBC-TV18 has not verified this report independently, but we did manage to talk to a couple of API as well as pharma companies. IOL Chemical spoke to us a couple of key points that that they indicated was that the likes of ibuprofen and paracetamol API are seeing some amount of shortage in larger geographies where there have been COVID-19 cases rising, such as US as well as China. The shortage is not seen in India as of now. They expect an increase of around 10% in terms of prices in case the shortages do continue. For them in particular, they do have a certificate to export to US, EU as well as Latin America and Middle East, and they could probably benefit in case the shortages do increase or continue, and that would only be assessed in the next couple of weeks. We did speak to a couple of other companies, and their feedback is that as of now there's not a huge disruption in the prices or supplies. It's more likely to be a temporary disruption when it comes to APIs.
All right, thanks a lot for that, Ekta. Well, how is the pharma space expected to perform in 2023? Let's hear out what Sanjeev Prasad of Kotak Institutional Equities had to say on pharma stocks.
Pharma, honestly, you have to look at it on a more bottom-up basis. They have their own challenges. Many of them, US generic pricing, clearly there is no pricing power. You can make some money as long as you have a new product launch for it and you have some exclusivity around it, but that's about it. So, the stocks which you like in the pharma sector are more the domestic-oriented stocks because, you are seeing decent amount of, growth over there. Most of the at least the domestic part of the pharma company, that seems to be growing at about 10-11%, which is actually quite decent. And that's probably the business which we are much more excited about currently.
Well, the third headline now. Market regulator SEBI has decided to phase out share buyback from the open market in a gradual manner. Until then, a separate window will be created on the stock exchanges to conduct buybacks. SEBI chairperson has said that it will create a level playing field for all investors. Yash Shane is standing by with all of those details. Yash?
Market regulator SEBI in its board meeting yesterday has thrown some important amendments when it comes to the buyback regulations. The big message which came from the board meeting was that the market regulator wants to phase out buyback through open market or stock exchange mechanism completely by April 2025. But in the meantime, regulations there, that is open market buyback, have been made more stringent, like increasing the utilization of amount earmarked for buyback to 75% from the current 50%. Tender route for buyback is the more preferred one for market regulator SEBI, and here some relaxations have come through this particular board meeting. I'll just name a few of them. Market regulator SEBI has allowed an upward revision in the buyback price till 1 day prior to the record date of the buyback. Also, they've removed the requirement of filing draft letter with SEBI for such a buyback. There are more relaxations in the pipeline which would need a ratification from the Ministry of Corporate Affairs, and they are in discussion. That would be increasing the maximum limit of buyback to 40% of the paid up capital of free reserves of the company from the current 25%, and allowing net debt free companies to have 2 buybacks in the same financial year. Apart from that, market regulator SEBI also spoke about the delay which has been coming in IPOs after the DRHP has been filed. SEBI said that the regulator can't be blamed for IPO delays. Many merchant bankers have been repeat offenders when it comes to not providing the appropriate information to market regulator SEBI, and now what will happen is that in case a delay from the merchant banker, the DRHP papers will be returned and will be disclosed on the SEBI's website. On increasing trading hours, interestingly, market regulator SEBI said if exchanges want to increase trading hours, they can go ahead and do that. There is no interference from SEBI, or there's no restriction from SEBI which stops them from doing so. Certain important large brokers will be given a status of qualified stock brokers. They'll have to comply with enhanced monitoring guidelines from market regulator SEBI. Onboarding of FPIs have been made easier. REITs and InvITs corporate governance norms will apply on them as well.
Thanks a lot for that, Yash. Well, time to slip into a short break. When you come back, we'll run you through the remainder of the headlines. Welcome back. You're still with us on Markets Today. Well, let's run you through the remainder of the headlines that we're tracking for you. The fourth headline today, Shah Metallic zoomed close to 5% after acquiring a stainless steel maker, Mittal Corp, and draws up some big capex plan. To give you a quick background, well, this is a small plant that they have acquired outside their core Kolkata region. They've concluded that that buy, it's going to be with regard to the stainless steel segment. Now, what the management says is that they're going to be doubling the capacity. Currently, the capacity is around 150,000 odd, but in the next couple of years, they're looking at doubling it. As of now, the capacity utilization levels are rather low on this particular unit, but going ahead, they are saying that they could even, in fact, ramp things up on that front. Remember, the overall scheme of things, as per Shyam Metallics, they categorize their capacity at around 8.5 million tons odd. A lot of that is used in-house, remember, so that's not the output that they sell. But from their capacity, as per their reckoning, they're expecting it to double in the coming time. So this small acquisition fits in perfectly. They're also talking about doing a big capex of around 10,000 crores. Part of that is already underway. That's close to around 4,000 crores odd. But they're confident that most of this capex will be met by internal accruals. In fact, earlier today, we caught up with the management. He told us that he's expecting revenues of close to around 2,000 crores from that new acquired plant at full capacity next year. And going ahead, they will double the capacity. Let's hear him out.
This plant is functioning now, but the capacity utilization presently is very low. And once we take up the complete control of the plant, because it is under the acquisition process, we'll be running from next year at full 100% capacity. About the acquisition cost, overall, we have to do some little bit of modifications and upgradation, which will not take much time. The total acquisition value will be around 450 crores. 4,000 crores capex has already been declared. We should be over by end of next year, 24. And we have acquired another plant, Ramsarup Industrial Corporation, where in next quarter we'll be declaring the capex for the same. The capex what we have declared for additional 6,000 crores is not going to come in next 1 or 2 years. We have said around 4 to 5 years. And since we are done with our existing capex, what we have declared in the past, so all these things is going to come through the internal accruals, and we have around, we have to dilute another, 13%, 12.5%, 13% stake for the SEBI guidelines. So we will be getting a lot of cash in our system from that as well.
Well, the stock did come off considerably actually from the high point of the day because the float in the market is rather low, with the promoter holding on Shyam Metallics at around 88% odd. But sticking with some stocks in the news, Uno Minda, well, it ended more or less flattish after gaining in early trade on the back of a technology alliance with Ascentech of Korea to develop wheel speed sensors in India. Sonia is tracking that. She joins us to fill us in with a quick update. Sonia?
Well, thanks a lot for that. Uno Minda has entered into a licensing agreement with a company in Korea called Ascentech, and this is in order to strengthen its automotive sensors portfolio, where Uno Minda will be designing, developing and marketing wheel speed sensors in India. Now, this is important because Ascentech is a leading supplier to OEMs in Korea and in the international market. And Uno Minda had a couple of years ago set up a separate division for automotive sensors. Now, demand is picking up with higher safety technology, higher sensors in the new vehicles, and hence Uno Minda has tied up with Ascentech for this. Remember, the stock is down almost about 12% in 2022, has not given any great returns, but the outlook from the management is positive. Back to you.
Okay, thanks for that, Sonia. Well, Glenmark, that was a big outperformer today after the launch of a diabetes drug. The company says that the drug will reduce the daily cost of therapy by 40%. Ekta has been tracking that. She joins us to tell us more on the specifics. Ekta?
Well, yes, Glenmark is in focus because they've launched a triple fixed dose combination drug for diabetes. That means that there are 3 diabetes drugs within one drug. Now, the drug contains teneligliptin, pioglitazone, as well as metformin. The drugs are used for type 2 diabetes as well as high insulin resistance. The drug is launched under the brand name Zeta Piomet. Now, why exactly would Glenmark probably benefit is because it is one of the first companies to launch this particular combination in the Indian markets. The market for oral diabetic drugs in India is already close to around 12,000 crores. It's growing at around 6.3% on a year-on-year basis. And Glenmark has launched multiple diabetes drugs since 2015. This would add to their portfolio. They would probably have a first mover advantage in this triple combination drug, and hence maybe there is some amount of excitement on account of that.
Thanks a lot for that, Ekta. Well, moving on. Honeywell Automation's Managing Director, Ms. Ashish Gaikwad, says that the company is in a bright spot due to its work in digitization and sustainability. Let's hear him out.
Certainly know that there are some bright spots in the over the global scenario that we sort of monitor, and we certainly are going to look at those bright spots where there is more opportunity for us. We believe that the two areas, the two mega vectors that we are really working quite a lot on is the digitization and the sustainability part.
Well, City Union Bank lost 6% after the RBI's audit assesses NPA numbers to be higher than that was reported by the bank. Abhishek joins in to explain that to us. Abhishek?
The divergence is the difference between what RBI says should be a gross NPA level versus what the bank has actually reported. So for City Union Bank, the bank has reported a gross NPA divergence of 259 crore, which forms about 0.64% of the FY22 book. So gross NPA divergence is more than 13% of FY22 gross NPA. Remember that if it is above 15%, then they have to disclose to the exchanges. Less than 15% does not warrant a disclosure to the exchanges. This time it has been reported, or it has come to exchanges given the fact that someone had filed for an RTI. So provision divergence is of a mere ₹40 crore. Now analysts say that they expect the bank to report slippages of 400 crore versus management guidance of 300 to 320 crore in Q3. So bank could miss the loan growth guidance. Bank had given a loan growth guidance of anywhere between 15% to 18%. So provision impact is not much. It is just a 40 crore provision impact that they will have to take on the book. However, analysts say that the stock can decline as much as 15% from the current levels. Back to you.
Thanks, Abhishek. Well, moving to our fifth headline today then, the RBI Governor, Shaktikanta Das, has made yet another pitch against private cryptocurrencies. He said that they originated to bypass and break the system and have no underlying value. Speaking at an event organized by Business Standard, the governor warned that if private cryptocurrencies are allowed to thrive, they could possibly cause the next financial crisis. Let's hear him out.
They have absolutely no underlying. And not only that, I am yet to hear any credible argument about what public good or what public purpose it serves. If it is allowed to grow, that if you try to regulate it and allow it to grow, please mark my words, the next financial crisis will come from private cryptocurrencies. The credit growth, 17.5%, that is the latest number as of December 2nd, which we have, I think, published, 17.5% credit growth. That reflects the underlying fundamentals of our economy. The credit growth in the previous 2 years were very, very modest. In the first year of COVID, the credit growth was just about 6% or so. The second year, it was slightly better. So on a low base, and that is the second point, the current 17.5% is on a low base of the previous 2 years. There is a base effect which is also playing its role here. So it's on a low base. And second point, it is reflective of the underlying fundamentals of the economy, and it is also a reflection of the pent-up demand of the pent-up demand for credit of the last 2 years. Europe and other countries, large number of countries are facing, facing a very serious growth slowdown. 6 months ago, the talk of, or 5 months ago, the talk of a global recession was much more intense. Now the expectations built around recession have slightly moderated, but the fear of recession in many parts of the world, or the fact of slowing growth is quite visible in large parts of the world. The tightening of financial conditions world over, all these factors, external factors, will have an impact on the domestic growth scenario. But the underlying economic activity in India continues to be strong.
Well, on that note, we'll wrap up on this edition of Markets Today. Thanks so much for watching.